Let's bring in Erik Hirsch. He is a co-CEO of Hamilton Lane. Erik, great to have you with us.
Melissa, great to be back.
You are in the crowded camp right now of a September rate cut. Why not July when we're hearing, increasingly Bill Dudley, for instance, last week saying we are ready right now for a cut?
Well, we might be ready, but the Fed's not ready, is our opinion. And so I think they're still processing the data, and I still think you've got some conflicting pieces out there. The consumer in particular, I think, is really sitting in a pretty bifurcated spot. On the bottom end of the consumer, you see places like McDonald's and other who are kind of catering to, again, that sort of lower end consumer who are seeing some real softening, and that consumer is getting squeezed hard. The top end of the consumer market, though, is just the exact opposite. High-end restaurants, high-end travel, leisure, resorts, et cetera, spending continues really kind of unchecked. And so I think trying to balance out those two camps is tricky right now.
So, Erik, in your top picks, infrastructure and domestic manufacturing make sense regardless of who wins in November. But private credit sticks out to me a little bit here. Why are you optimistic about that sector?
Well, I think you're still continuing to see a real need for borrowing across the company landscape. And beyond that, I think what you're also sort of recognizing is the regional banks are just not coming back in a meaningful way to be providers of capital. And so unless you believe you're going to see a real sea change in the banking sector, which we do not believe, that private credit market is going to have to continue to fill that void.
Are we going to reach a point where we're going to see the weak players emerge from private credit? Because it has become sort of a crowded area.
I think so. I think that market, again, we're not saying everything is great or all the players are terrific or that returns are going to be uniformly good across everything. Part of the benefit right now in the private market is that you're seeing that real dispersion of performance. And so folks like us make money by making better picks. I do think, however, size and scale are going to matter. And so I think you will start to see some consolidation as that market continues to mature.
So, Erik, obviously, as juxtaposed against regional banks, which have been real laggards and only just popped, but it really doesn't change their circumstance. Some of these boutique firms like Jefferies and Moelis, Evercore, Piper, Oppenheimer, and so forth have been huge high flyers, outperforming some of the big tech names. What are you thinking there?
Well, I think two things can be true at the same time. I think you can see firms like those do well based on revenue sources that are coming not from lending. And so I think we sort of can see a bifurcated market here where regional banks and advisory banks, like a lot of the ones that you mentioned, can be very strong performers as people need their guidance and advice in their service offering. And at the same time, we can still see regional banks not getting back into the lending business in a big way.
What struck me as interesting in your notes, Erik, is how you see the future private markets evolving, that you want it to be on the blockchain and you think the retail investor could get involved. Why is that a good thing, and how far off do you think this is?
Well, I think a couple of pieces there. One, the retail investor should be involved. The institutional investor has been benefiting from this market segment for decades, and the retail investor has largely been squeezed out of it, again, from either a fee perspective or from an infrastructure perspective or from an access perspective. That is all beginning to change in a meaningful way, but we think one of the ways that it could really accelerate is by making this more digitally native. Again, that lowers the investment minimums. It allows you to transact in a much more seamless way. And we think all of those things are going to be very attractive for the consumer. So that market exists today, again, relatively small. Hamilton Lane is a major player in that space, having tokenized several fund offerings in the US, in Europe, and in Asia. And we're beginning to see the customer uptake really beginning to sort of get moving there. But again, I think for the retail investor, easier, faster, and cheaper is going to be imperative. And blockchain and tokenization is a key to doing that.
Erik, great to speak with you. Thanks for your time.
Pleasure. Thank you.
Erik Hirsch, Hamilton Lane.